Welcome to the Biz Coach Show, brought to you by My Biz Coaches. Our show is focused on giving entrepreneurs the edge they need to succeed. Learn more at mybizcoaches.com. Our guest today is Tevia Hoalst, owner and founder of Dakota Accounting. Their mission is to obliterate the accounting industry's status quo by delivering next-level accounting services to help their clients grow. With a degree in business and finance and over 15 years of customer service experience, Tevia and her team have successfully managed finances across 60-plus industries. Learn more at dakotaaccounting.com. Well, Tevia, it is great to have you with us today. How are you doing?
Wonderful. Thank you for having me.
Yeah, absolutely. Our pleasure. I know we've been excited to talk with you. And Eric, always great to hang out with you. How are you doing today?
I'm doing excellent, David. And yourself?
I am doing pretty good. A little under the weather, but on the mend. So I think I'll be ready for the weekend. Thanks.
Good to hear.
Awesome. Well, good stuff. I know we have a lot of great points and topics we're going to cover today. Before we get into that, though, Tevia, I'd love to know a little bit more about your background, maybe a little bit about your journey, if you wouldn't mind sharing that with our audience.
Yes, I would say a nice truncated version is I came out of school focused on international business and finance and worked for a large private corporation doing a lot of finance and analytics, and just learned along the way that I missed small business from my earlier days and loved small business, and that as a lot of people have experienced, corporate culture can be quite a shock and kind of a cog in a wheel kind of feeling. And I just set out to make a culture before I even knew what I was going to offer for a service, to have a wonderful culture that people felt valued and wanted to be at. And I knew in, my heart, if you will, that if I took care of them, they would take care of the clients, and it would just spawn a really healthy environment. And so that's, in a very basic way, how we got to where we are today.
Awesome. I love that. And as you're talking about culture, I mean, certainly that's one thing that makes your business unique. What else makes Dakota unique or different from other accounting firms that are out there?
Yeah. So the first thing that comes to mind is, as you kind of watch me, hopefully through the podcast, I have quite a bit of energy and I'm pretty social. And that bleeds through the company. We are not your typical quote unquote, accountant that doesn't want to talk to you. We are very caring and we like to make relation with our clients. And why that matters is the more that we know them, the more that we spend time understanding what's important to them and what they want to watch and what they're trying to accomplish, we can proactively be a partner. And instead of just turning out financials and kind of saying, hey, good luck, we did our job, we take it another step. And as you mentioned in the intro, our company motto is obliterate the status quo, which to us means we are going to proactively advocate for you and interact with you to try to bring as much value and profit, to your company.
Awesome. Yeah, I think that's great. Kind of like accounting with a personality, right? I think that's
totally
one way. Yeah, for sure. So,
yes, fun and personable is very, very big in our company. Yes.
Awesome.
David, you recognize that you're really infringing on me here. This is my background. I went to school for accounting.
And Eric, you have a personality too, so that's good. You're in the mix.
No, it's funny, as she was speaking, I could resonate with that. I mean, that was actually part of what drove me away from accounting as a career. My junior year, I got an internship, and I'm just like, oh, I could not do this every day for the next 20, 30 years. So I pivoted into finance. I ran into finance. I'm like, no, I can't do it. But what I will say, though, being an entrepreneur and in an executive level leadership for 25, 30 years, one of the things that paid me a ton of provided a lot of value in my career was having a background in accounting and understanding the finance of a business. Understanding the accounting components of it and how that really plays in the business decision making. Mm-hmm. But that was very valuable for me, and I think honestly, more people should be required to do more accounting, and not maybe the debit and credit kind of accounting, but understand more of even I would say managerial accounting, job costing and things like that.
Mm-hmm.
So many business owners, as a coach, so many business owners just have no perspective on how to come up with that information. And I'm sure that's a lot of value. And I know there's a lot of value lost because they just don't have it. They don't grasp it. And quite honestly, to your point, most accounting companies don't provide that kind of information.
Mm-hmm. Yeah.
Yeah.
Absolutely.
Awesome. Well, thanks for sharing some of your background and a little bit about Takoda. Today, we're going to be discussing bookkeeping and beyond, right? So not just bookkeeping, but some of the other services that you provide and things that entrepreneurs should be thinking about as they're managing their own business. And one of the things that comes to mind for me is maybe not the most exciting aspect of running a business, but budgeting, right? But it's really critical. And I'd love to get your thoughts on why budgeting is so important for the small business owner.
Yes. So I'm going to bleed into a little bit of another question because to us, the way we look at budgeting is kind of a good, better, best scenario. And what I would say is to have a budget is a good scenario. And, we'll go deeper into what a budget versus like a forecast is. And to us, the way that we coach our clients is, a better scenario would be a live or changeable budget, and best would be using a budget and a forecast in tandem. And the reason that we say that is because there's a lot of psychology behind budgeting. And when you're doing a static budget, that's actually kind of a reactionary tool at that point once you have it built. And a lot of people, from a psychological standpoint, actually will aim to budget, but will either achieve or just under what their budget has set. And also, when there are changes in the market, what we find is people then, well, we have the budget, we got to do the budget. And in reality, as things change and we have better or worse markets that come through, and we have to have that adaptability that instead doing like a fluid forecast is going to bring us, so that we can use those tools. But generally, I would say having a budget and then going into fluid forecasting, which can be a proactive looking tool, any of that is going to be better than not using anything at all, because there is still planning is planning. And if you aren't using any tools at all, you're maybe not planning for the best success. So
yeah, no, that makes a lot of sense.
Yeah, great points. Absolutely.
So I guess as we think about that, you kind of talked about, forecasting and a live budget and some of those things. So are there any other maybe tips or tactics that you would offer to a small business owner who is maybe inexperienced or struggles with creating budgets?
Yes. So when we go to look to support our clients that are doing that, or of course, when they're just doing it on their own, a couple of things. We want to keep it simple because, most of our owners, as Eric mentioned, don't have an accounting background. So you want to keep it simple, because if it's too complicated, if it's too high level, you're just not going to use it long term. We've seen that time and time again. So, and also trying to utilize the tools that you have. When you're looking at bringing in a new tool to do a budget or forecast, not only are you looking at adding a cost, which can be, difficult for a business owner, but there's time and education in knowing that tool, and who on the team is going to have the time to do that, so that then you are effectively using it. So our tips would be, keep it simple, try to use softwares that you already have or know, and make sure that it is usable information, so that you do long-term get in a habit of turning to it and giving, budget to actual, and making sure that you're checking that information.
Yeah. I love that. The simplicity, something Eric and I talk about a lot, is simple gets executed, right? So the more complex it is, the less likely we are to do it. So I think that's a really important point.
Absolutely.
A quick question for you, Tevia. In regards to software, I'm assuming your traditional answer is whichever one you're going to use is the right answer. But generally speaking, I would assume there's one or two that you probably lean to the most. What would be those softwares that you would encourage people to look at?
Yeah. So yes, I definitely would try to typically go in and use a version of what they already have, just simply because a lot of tools, you can utilize that. But having said that, if you are on QuickBooks or, a similar competitor, there is a version that has like a budgeting tool. It's quite rudimentary, but it will work. And again, keeping things simple. So QuickBooks has something if you're already on it, just you have to make sure you have Plus or higher to utilize that. There's also another tool that we like. It is a standalone tool, but when it is appropriate for companies, it's called Sift. We've had a lot of success with that. And those are more working with our companies that might have multiple entities. And Sift does a good job of taking that data and aggregating it together so that you can see one report of how your companies are performing. And of course, they have all the budgeting and forecasting and financial analytics data as well. So that would be like a standalone one that we would look to as a potential option as well.
Awesome. Interesting. Thank you. Appreciate that.
Yeah, good stuff. Okay, so we explored budgeting a little bit more. I think maybe can you talk to us a bit more about kind of forecasting versus budgeting and how those two things work together and maybe even support one another?
Totally. Yes. So you certainly, it's okay to start from a budget, but most people, the way they do use a budget is they'll do, like an annual budget. And it's like I mentioned, it's very static and you are looking retroactively towards that. And that is a great place to start. But where we like to see the clients transition is actually using forecasting, where you are forecasting out what your revenues are going to be, what your expenses are going to be, your aim for your net profits, of course, and all of the points in between, your cost of goods, payrolls, all of these things. And what we're looking for in that is that you are using your monthly data to verify how you came in, whether you are using budget or forecast, either way. And you want to go actuals to budget and give yourself that grade, right? And then instead of leaving it as is, we want to be modifying throughout the year because maybe we are performing above where we projected. And we certainly don't want to keep those aims or measurements that we're having. We want to go, hey, we're in an up year. Let's take advantage of that. Let's push our team a little bit, maybe adjust our KPIs, and let's take advantage of what's in front of us, because we also know we're going to have those markets that are down, and we want to be able to do the same in an opposing way.
Yeah, that makes sense. Eric, I imagine you have a couple of thoughts on that with your background in sales and leading sales teams. So anything you want to offer on forecasting?
Yeah. Well, and it's refreshing just to hear Tevia speak, because quite honestly, I've got a big rub with accounting in the practical application business world. So this is going to sound like I have a huge bias, but the reality is of all the clients I've engaged with in the 4 years I've been business coaching, I have yet to have a client that I didn't sit down with and say, you need to find a new accountant.
Oh.
Yeah, I think the challenge is that most people in the accounting space, and I'm probably referencing more specifically CPAs, there's this general tendency to do tax preparation. So they get into the point where they do the tax preparation. Somebody in the business, maybe even the business owner, does the books, and they go through it and they're like, okay, here are my numbers. And I don't believe that there's a real strategy to all of this. And it just, they do the taxes, they get it done. And then at the end of the year, all you're looking at, and this is my frustration, all you're looking at is what happened last year. All the strategy comes from projecting forward over the next year based on the information we're looking at from previous years and saying, okay, this is what we need to do differently. So when it comes, like talking about sales, as David referenced, if we see that, to your point, sales are either trending up or trending down, we can adjust accordingly. And if you're, to your point, if your budgeting analysis doesn't allow for that, or you're not extrapolating from the data and saying, hey, we need to, the market's not there, we're in the middle of COVID, we're going to have to readjust, right? Or, hey, we're crushing it because of COVID for whatever reason. We should be readjusting our projections, right? And to take advantage of that runway. And I think there's so little of that taking place in most small businesses. And I think that creates a big challenge. I mean, I'd be interested in your perspective on this, Tevia, because I interviewed a business broker here in the Valley, and when he and I engaged, one of the first things I asked him is look, I heard a statistic, I didn't believe it, but 80% of small businesses never sell. And he goes, I don't know if it's 80%, but that's probably pretty darn close. I've been doing this 38 years. I would definitely agree with that statistic. And I said, well, one of my coaches had seen him speak and said I needed to talk to him because there's some really great information he shared. And he went through a series of 4 different reasons why businesses don't sell, why 80% of businesses don't sell. And he said that the number one thing was bad books. Mm-hmm. And so, I sit down with a client, and having that background in accounting, the first thing I do is let's look at the books. Let's get a handle for this. Let's find out where you are, because the numbers will tell us where, even as a sales manager and a sales executive over the years, I used our P&Ls to figure out where the gaps in our business were. I used the financial data to go and look and see. And so your information, the type of information you're talking about putting together for your clients would be so valuable, because it's a lot more than just my standard P&L report. You're actually talking about how close did we come to budget? How much do we miss it by? How much we're overachieving and we're adjusting accordingly. So I'm really pleased to hear that, because the reality is, at the end of the day, one of the big challenges is these business owners don't have that understanding of accounting, not even a basic understanding of accounting. And too often they're relegated, the role is relegated to somebody say, hey, just take care of this and then give me my P&L so I can do my monthly reporting. And there's so much information can be gleaned from reviewing that information, which it sounds like that's what you do a lot with your team.
Yeah, well, and I would actually say my personal favorite clients of ours are the ones such as yourself that do have an accounting background. Most people are going to go in and be intimidated by that because they, you know what you're looking for. And
right.
Instead, I love that, because I know that our team we have sourced the best that we can, and they're incredible at what they do. And you guys understand 2 very important things, which is, you understand the work that we do, the value that it brings when it is done right. You understand that it is right. And also, you're going to utilize it, which our biggest wish and what we try to push for the clients is, there is nothing more valuable than your own data and your own performance, and measuring yourself to your own performance. So it's incredibly important that you have good, correct data and you are actually using it.
Yeah, great point. I love it.
Yeah. Well, Eric, it sounds like if you have these clients that need to fire their account, you know where to send them next, right?
I definitely, this is a good reason why we had her on the show, right?
Yeah, there you go.
Absolutely.
So, awesome. Well, we just kind of touched on this, and I'd love to dive a little bit deeper. As I was preparing for our episode, I noticed that you do so much more than bookkeeping, and I'd love to hear a bit more about some of those services that you offer to your clients beyond what people maybe tend to think of when it comes to bookkeeping or accounting.
Yes. So in a general answer, and then I'll get more detailed, is if you think about it, anything for finance outside of actually submitting the tax return. So we get really custom for our clients, but from a more detailed perspective, we do the bookkeeping, we can submit payroll, we can do sales tax, which we find is, a huge benefit, because there's a lot of e-commerce going on where owners do not understand sales tax nexus across states. So we really watch out for that when we're watching e-commerce. We do accounts receivable, where we're actually doing invoicing for clients. We'll do also payables, where we're paying the bills if that's a needed service that they don't have sourced internally. A couple of things that I do in the company outside of that are my favorite, and point back to what Eric was talking about, is I do some consulting on CFO work, but my very favorite thing that we do is we do have some private equity firms that do purchases, and they will actually send the financials to be vetted. And that is my ultimate favorite thing to do, is to vet through financials and get out my red pen, and not from a perspective of marking up, what's wrong, but from a perspective of helping. This is what's going right in this company. This is what's incorrect in the accounting that you have to ask more questions about. This is a little bit of a tangent, but I have in the back of my mind to actually write a book, because I have seen so much private investing and so much money and almost no vetting was done to the financials, not enough, not correctly. And in many, many, many cases, that private equity money comes in and is spent. It's not spent well. It's not spent right, because the people coming in and investing have done it off of word of mouth or assumption, and they are not asking the right questions. And so I've just kind of been like documenting lists of like, what do you need to know from the accountant before you put money into a company? Because these are the questions you are not asking. And I'm excited to turn to that one day and put that out there, because I genuinely feel like a lot of business, and correctly so, is done off of feel and done off of networking and connection. And when it comes to business, baby, numbers are everything. So I like to look at the numbers.
Yeah, you're speaking my language. I mean, it's as you're saying what you're saying, I'm just like there. I can speak to a handful of scenarios very similar where it was the same thing. And you've got startups that are spending money and they don't know what they're not doing their due diligence, and they're spending money like it's going out of style. If I was the investor, if I was the angel investor or the preliminary investor in that, and I'd be like, well, hold on. First thing we're going to do is we're going to outsource your bookkeeping and accounting to a new company, and Tevia is my new best friend. So,
well, I mean, honestly, like when I look to put money in something, there's two things I'm looking for. You better have strong accounting if you're getting my funds, and you better put money into, if you're large enough, into a CFO or a contracted CFO that is directing how those funds are used. Because I tell you what, it is the last seat that any other executive wants to fill, because nobody wants to be told how to spend the money. But that due diligence is so important to make those dollars stretch as far as possible for business. It's just imperative.
Great point. By the way, when you write that book, David and I will be the first two people to buy it. So
yeah,
and we'll have you back on to talk about it.
What are those little blurbs? Yeah, you can give me one of the blurbs. I got the word.
Absolutely.
We'll do a spotlight on the show for you too. So
yes, absolutely.
Well, I love it. That's great. Well, perfect transition into kind of our next topic, which is mistakes that small business owners make when it comes to managing their finances. So I think that's one of the things that's unique is, you've seen so many different businesses, so many different industries. I think we talked about over 60 different industries that your team has worked with. So you've seen a lot of different things. What are some of the common mistakes that you see people making over and over again?
Yeah, so a few of the more general ones, and then I've noted a couple that I want to talk about that are more specific, is, I just don't see enough companies planning for sufficient savings. You have to, what I would call, plan for success. And that means when we are doing that forecasting or budgeting, I start with the bottom in mind. What do you have to have in net profit to keep this engine rolling? Because as we know, cash flow is king, and it doesn't matter what you have in receivables. If the terms are too long and you are crushed on cash flow, you have to watch all these things. So I start backwards. I go from net profit. I work up the P&L and determine what are we looking at. And that is going to help you know what your sales numbers have to be in order to then save. So planning for all of that success is incredibly important. I don't see enough of it. I would also say when you are having success, planning ahead of what the next hire has to be. I see too often that we're randomly filling holes. And you have to think out your org chart, your future org chart. And you have to know, when we have this success, when do we need the sales manager? When do we need the customer service manager? When do we need the quality manager? Like all of these things. And we have to have a plan for who is the next hire and what is the cost of that person, and saving ahead for at least a partial, if not all of these costs, is setting yourself up for that long-term success, which are just a few of the things that we see kind of get missed a lot.
I love it. Eric, any of those resonate with you and some of the things you see working with clients? I saw the smile, so I knew it.
None, right? Not a single one.
Every one of them, and 2 or 3. I could put an X, multiple X's next to some of them. Yeah, the what's interesting is as she was going through that, I'm actually thinking of a couple of clients that I probably need to introduce you to. But yeah, as you're saying that, we literally a coaching session yesterday. We're talking about, hey, we need to your business is maturing to a point. You're doing well. Business is maturing to a point where we need to figure out how we allocate dollars to determine who's going to be in a sales role, because they've done all their growth. It's a unique business, so they've been able to grow really substantially on word of mouth and things like that. But now they've got to allocate to go from where they are to that next level. They're going to need to actually create a sales team, or at least an individual to oversee that. And I'm like, so we need a budget for that. And we need to figure out, okay, well, the going rate, I can tell you what the going rate is. I managed salespeople for 25 years. It's going to be a chunk of money. You're going to be 80 to 120,000 minimum. And I said, with a reasonable compensation structure, we got to figure out what a commission plan would be for that. So, and then we need to make sure that the business can support those numbers. So, to your point, right? We need to budget for that. And how long is it going to take us to get to a point where you're comfortable that we can do that? And that maybe, is that 6 months? Is that a year? I don't think we can wait a year, to be honest with you, as I'm having that conversation. So these are, everything you're saying, it's really refreshing to hear your perspective, because there's a lot of opportunity. There was one other thing I wanted to add, and it was in regards to the conversation that I had with the broker that I referenced earlier. I said to him, you've seen enough of these businesses. And he's at a point now, he's 38 years in the business. So he's at a point now where he's seen enough deals fall apart because of finances specifically, right? And I said to him, how does this constantly happen with all these businesses? And at this point in his career, he's doing 50 million plus type deals. So he's not, and we're not talking about the business owner that's doing, 20,000 a month or something like that, but he's seen all of those. And what he said was, he says, the problem is, even at that, especially at that stage, because I would assume if it's me, I've got an accounting team at this point, right? And I'm like, how does that happen? He says, well, think about it. When you first start your business, you're trying to protect every dollar. And most people have a natural tendency to go with somebody they very much know and trust. So who are those people? Friends and family. And so you take somebody who may not necessarily be qualified for that role, but you trust them. You put them in that role. Well, things are cranking along. The business is doing really well. You're doing a couple of $1 million a year. You're not going to move them. They're friends and family, right? And they're not really prepared for another role within the organization. And you're not going to oust them out of that spot. So you give them the promotion to controller, right? And then things progress along. The business is now doing 10, 15, $20 million a year. And now they're the CFO without really any understanding of traditional accounting, managerial accounting, any of the components that would be necessary. And he goes, so now you got a $20 million business with somebody who's completely unprepared to be in that role. And you can't, and this is why you keep running into these businesses, good sized businesses that are very profitable, that didn't have the right person in place. And I was baffled. I was blown away. I was like, I wouldn't allow that to happen. Right. But I also, to your point earlier, I have the understanding, and I can see how that can dramatically impact a business.
Yeah.
Mm-hmm. I cannot tell you how many clients we've had come in that they had someone internal, that was friends or family. And the point that I would make there too is there's a lot of confusion about skill sets, right? A lot of people think because tax, because you do tax returns, you should also know accounting. And the reality is that typically there are some that learn both, but a lot of, say, CPAs haven't done bookkeeping. And they know how to know that the financials are right, but they don't know how to populate that work. And vice versa. We do not make our living doing tax returns, and therefore I don't spend my days reading tax code, and I lean on CPAs for the tax portion. But what I would say is that there's this misunderstanding about what the skill set is, and that, oh, well, I do this one thing, so I can do the other. And the respect that I would give to each position is anytime in my life that I have gone and learned something, inevitably, whatever the skill set is, you end up learning a depth to that you would not otherwise know. And so anytime we're assuming, oh, I can just do that, but I don't have the education in it, you're probably going to step in something along the way, that you haven't figured out. So
that's a great point. I appreciate you sharing that. I wish more business owners would adhere to that message, right? Because that's a huge opportunity out there.
Yeah.
Absolutely.
Awesome. Well, something that we haven't talked about, but I know is very important to the work that you do is record keeping. And visually what comes to mind is the business owner with their receipts in a shoebox, right? And some of those horrific stories that we hear. But maybe share, if you would, a couple tips or tricks for small business owners for effective and efficient record keeping.
Yes. The first I would say is finding digital solutions. It doesn't really matter whether you're a digital business or not, but the stress of having a year's worth or 7 years worth of paperwork pile up, and receipts and paperwork and so on, is really laborious to anyone. It's not easy to keep, it's not easy to find. So, one thing that we help the clients with is finding a digital solution to keep receipts, to keep statements, to keep checks, all of these things. So you want to lean on those resources and find what works for you. There's multiple options out there. The other tip that I would say is not over saving. We have clients who, for one payment, we're getting 5 different forms of confirmation and payment and whatnot for proof. And in reality, you do want to have your backup for potential audit, but there isn't necessary to oversave those items. And again, then if you're also teaming that with using it digitally, even if it's, a secured Google Drive or whatnot, you're really saving yourself a lot of effort and mental anguish in, papers everywhere.
Sure.
Save the trees.
Awesome. Good stuff. Well, I think just a few more things we want to pick your brain on. One is around taxes. And I'd be curious if you have any tips or tricks or advice for business owners on how to effectively assess or maybe even minimize their tax obligation.
Yes. So, my biggest tip is not going to be a huge brain buster, but that's going to be making sure, to Eric's point from earlier, that you find a good tax partner who is engaging with you. And all too often, we also see that you are lost in the sea. And this is happening more and more because there are too few tax accountants for all the people that need taxes, right? So they have the pick of the litter, and if they don't want to talk to you, they kind of don't have to. So working very hard, taking the time, as painful as it is, to interview those partners, but then also hold them accountable. And they should be talking to you. You should be hearing from them at least quarterly, because businesses have estimated quarterly taxes. And, it is not too much to ask that they are keeping you on track for that number and bringing you in and doing these planning strategy sessions that we've talked about. And if you are just getting a packet to fill out at the, first quarter of the year for your taxes, and then they're getting filed and you are getting no tax advice, I promise you there is a better partner that will help you take advantage of what is going on in the business world better than what you're getting, and better for the value of your money. So that is number one, is your partners have to be invested in your success and not just supplying, the bare minimum outcome. Other than that, I would say just making sure that you yourself are staying educated. Business is for people who are, intrigued and loving to learn and wanting to grow. And it is up to us to go do a little digging about what is it I'm trying to do? What am I interested in? What do I want to achieve? And ask them the questions, hold them accountable, educate yourself and ask them to clarify. I know they're not going to love, I read this on Google, but sometimes we have to do a little bit of work to make sure that we are protecting ourselves and that we're knowledgeable. So getting good partners, also keeping yourself knowledgeable, staying on top of what's going on, because we know with every administration, the tax can change. So you can't just get comfortable and expect that you understand what's happening.
Love it. That makes sense.
I can think of a number of things to say. I'll just say, well said.
All right.
Love it. Well, cool. I think just to kind of wrap things up, we've talked about some things that apply generally to all sorts of businesses, but I'd love to hear, because you've worked with so many different businesses and so many different industries, are there any industry-specific accounting practices or challenges that people should be thinking about in sectors like healthcare or real estate or technology. So some of those unique things that maybe only apply to a handful of businesses or business types.
Yes, and we do work with all those sectors. So I can speak individually to kind of some of the challenges we see. And specific to healthcare, I would say we often find interesting hurdles to appropriately get access to what needs to happen for the accounting due to HIPAA laws. There's a lot of information there that's going back and forth. So you want to be very, very secure and very aware of what can be shared and what should be shared, especially when you're dealing with receivables and payables and this information. So those are things that we see get violated time and again from other services that we kind of watch out for. The other thing with healthcare that's a big deal is cash flow, because there is a lot of long receivables that happen, not only with insurance, but if you're doing private pay as well. And that can be stressful. That circles back to takes incredible planning, because if you're having these long cycles of cash flow, you have to know what's going on and when. And you also have to stay on top of, maybe calling on those receivables and getting them to stay on the timelines that you are expected so that you don't get in trouble. And I would bookend that with, you have to keep sufficient savings so that when those receivables are out of cycle, you have savings to buffer that from that perspective as well. And then I think the last point I would make is managing debt, because the healthcare system, can have debt from patients or insurance not paying or whatnot. And that takes a little bit higher level accounting planning to ensure that you're not only recording the debt appropriately, but then your tax CPA is utilizing that, whether in the current year or years forward. And if you don't have that recorded appropriately, then they can't use that for you to help recoup some of those losses.
Tevia, I have a quick question for you. If you were to put a percentage of your sales on how much you would allocate for receivables, meaning in-house credit, something like that. And I'm sure it varies based on industry. I'm sure it varies based on, but if you had to draw a line in the sand and say, 20%, 30%, 50%, whatever, what would be, or what, at least if you couldn't draw that, or say with that number, with this caveat, it would be because of this or whatever, but what would be your general guidelines there?
Yeah, I would say on receivables, you don't want to be getting probably more than 30 to 40% of what's coming in, in receivables, meaning you're not getting over 30 to 40%. You want to be collecting it quickly enough that it's staying at or under that realm, because if you're getting higher than that, you're getting into that cash flow cycle where, and I would say you have to team that with how much savings are you keeping, right? So for every percent of receivable that you have, you need to be buffering up the savings, because if something happens, take COVID, for instance, how many people had receivables on that overnight people just weren't able to pay because maybe they were dealing with a more life-threatening concern. And, that's a whole different beast, of course, but just making the point that if you are going to keep a higher percent of receivable, especially with longer terms, then you need to be thinking about my savings also needs to be more than maybe the minimum 2 to 3 months of operational expenses. You might need to consider saving 6% or I'm sorry, 6 months. And I would buffer it that way so that you have a bit of a plan.
I appreciate that. That's great. I did that specifically for a few of my clients. So I'll share that with them later.
Hopefully they're not groaning that it's much more.
Well, and it's funny, as you mentioned, COVID being the anomaly, and what I actually find myself educating people on a regular basis is we've had 5 significant either market transitions or significant setbacks in the last 20 years. I tell people it's not a matter of if, it's when. And so to your point earlier about having, resources, I know that in the previous business that Dave and I both worked for, the CFO, I greatly respect his mind for accounting. And one of the things we constantly had 2 months worth of our entire operating budget in the account at all times. And it was a discipline that he had built over the years. And it was, so literally zero revenue came in for an entire 60 days. We could continue to run the business. And it was pretty significant because we were a multi-million-dollar company. Actually, at our peak, we were a $100 million company, which I believe he moved the reserve to 3 months at that point. But I thought it was pretty significant. I mean, that was just in the operating account. That wasn't what we had in reserves in other places, right? So, but I respect the discipline, because when you grow a company, one of the biggest challenges, is cash flow, right? Managing cash flow as you're scaling, which is probably one of the biggest challenges that I see a lot of small businesses, any business really, quite honestly, but managing through that scenario, and even access to credit and how to use that intelligently. Which actually, if you have some thoughts on that, I'd be curious what your thoughts are on utilizing credit and how to leverage it with scaling up a business.
Yeah, well, and I'm glad you asked that, because I did have, in the back of my mind, one of the notes I didn't get to about mistakes is actually not managing debt appropriately. And what I would speak to that is, take that with a grain of salt, because, you obviously you can't mismanage debt and get too over leveraged, right? But there is a very, very important window where you are utilizing debt and you are utilizing that cycle. And effectively, it comes to cash flow, right? I mean, if you're paying cash, I had an owner, it's a great example. He was obsessive about older generation, obsessive about, I pay my bills on time. I pay them right now. I pay them as soon as I have the cash. And it was a constant conversation about, that is an emotional response out of pride. And I respect that. However, it is hurting your cash flow. And if you can instead utilize terms, utilize credit in a smart and reasonable way, we're not wanting to leverage over 20, 30% of our available, and things like this, these different rules, but you are stretching your cash flow. And what does that mean? If you have your cash in a smart high yield savings, if you have it in even CDs or whatever you're doing with your cash, all those months that you are holding your funds instead of your vendor or your creditor or whomever, you are gaining interest. And we're not talking small amounts of money when you're talking $100 million company with 3 months of operating assets. So any little bit you can do to bump that bottom line is just going to be so smart and get you that next step farther when you do have a hard time or you want to make an investment and you have the funds to do so. So it is incredibly important to use that in a smart way and go about that.
Appreciate that. Great insight. Thank you.
Awesome.
Absolutely.
Well, you have shared so much awesome advice with us today. We appreciate it. Is there anything else that you want to share about Dakota Accounting before we wrap up?
I would just say, we are here to be an advocate. We are not here, as our company motto states, to just get you the bare minimum. We are here to try to make a difference for you. One of our clients recently has dubbed us the profit protectors, which we are very fond of. And we earn that title, and we love it because that's what we are. We're here to help. We're here to bring value, proactively speak to what percentages you should be spending in your company dependent on size and help set all that success up for you.
Awesome. Love it. Well, and if people want to learn more about you or your team, we'll have a link to your website in our show notes and definitely encourage people to check you out.
Thank you. I'm grateful to be here. Thank you so much.
Yeah, absolutely. Well, Eric, before we go, I know you've got a lot of exciting things happening over at My Biz Coaches. I've been trying to get him to spill the beans on a big announcement for a while, so I don't know if this is going to be the time or not. But Eric, what's new over at My Biz Coaches?
No, I got to hold out just a little bit longer.
Oh no!
But it's coming. It's coming real soon. But I will say, we announced last week. I think it was last week we announced the AI webinar that we'll be doing. Unleash the power of AI with sales and marketing. And so we'll be doing that webinar next Thursday at 12 p.m. Pacific time. So excited to introduce that. David, you played a huge role in that, in putting that together. So I'm excited about that. Thank you very much. And we're excited to be able to introduce some extensions of our coaching, what we provide, right? We provide those every day, practical application that helps people grow and scale their business. And now we're dipping into the technology component, which Tevia mentioned it earlier about using technology. And that's a big thing that we hope business owners understand. And there's a big divide between those. I'm going to say, I'll draw the line at 50 since I'm pretty close to that line. But it seems as though over 50, it's really hard to get them to adapt some of the technologies available that would dramatically improve efficiencies in a business. And that's a huge opportunity, because those are businesses that are usually typically much more mature and could substantially reduce costs, increase efficiencies in productivity. And there's so many things that we can take advantage of, but they're adverse to it. And we're trying to help them understand that it doesn't have to be hard, and we can play the role of helping them bridge that gap. So that's we're excited to be able to introduce that program next week.
Awesome. Well, if you want to learn more about that, we will have a link to Eric's website in the show notes as well, and you can register for that free webinar with a lot of great information. And again, appreciate both of you. Thanks for being here. Appreciate the insights, and we hope that you subscribe so you don't miss future episodes of the Biz Coach Show. Thank you both. We'll talk to you later.
Awesome. Thank you.
Thank you.